Australia's largest banks are bearing down on crypto payments. As scrutiny on digital asset exchanges intensifies, what are the options for crypto firms down under? Amidst a rise in scams, will investors place their trust in money in the industry? And when will the call for regulatory clarity be answered? Coming up on Word on the Block, Caroline Bowler, CEO of BTC Markets, joins in to dive deep into those topics and a whole lot more. A 3-year-long court battle between Ripple Labs and the United States securities regulator had the crypto community on the edge. Then the judge ruled Ripple's XRP is not a security when sold to retail traders, sending the token soaring, while the SEC said it is reviewing still the decision. The case could have far-reaching influence on crypto regulations around the world. Now, halfway across the globe, in Australia, crypto firms are facing tighter licensing requirements and possible debanking as leading local banks like the Commonwealth Bank and National Australia Bank restrict payments to crypto exchanges to curb scams and fraud. Now, the need for regulatory clarity has never been more evident, but at the same time, regulatory disparity between different geographies also has never been more pronounced. So what is it that the crypto industry wants? What is the need of the hour? Let's dive into all of this and more on this edition of Word on the Block, the series that takes a deeper dive into blockchain and all the emerging technologies that shape our world at the intersection of business, politics, and economy. It's what we cover right here on Forkast. I'm Editor-in-Chief Angie Lau. What ripple effect will recent events have on crypto exchanges and the markets? Who better to break it down for us than Caroline Bowler, CEO of BTC Markets, one of the largest and oldest digital exchanges in Australia. And Caroline, welcome to the show. Great to see you again today. A lot has happened since the last time we talked. I think it was right before the FTX meltdown in November of last year was when we last spoke.
Wow. Things have changed ever so slightly since last we spoke. And in some ways, maybe for the better. We went from FTX. December was practically dead in crypto, and then we started to see the return come in January, and now here we are in July. And
oh my gosh,
we're definitely seeing a return in terms of liquidity, not necessarily in volatility, but certainly in a return of liquidity. And then we have Ripple.
Yeah, and then we have Ripple. I mean, the liquidity is the start of it, but you know, as I reflect on really what happened, I mean, you were really at the front of the battle lines in that we saw not only the degradation of trust from FTX, but it was really a contagion effect, and exchanges after exchanges got hit. What was the experience that you had with the trust you had been building up, one of the oldest exchanges in crypto in Australia, having built up that trust level even from the regulatory front, and then to be confronted by just this event that was really out of your control?
For us as a business, as an exchange, we saw an inflow of clients. People were transferring their funds back onshore, back into Australian exchange, particularly obviously because we're only Australians. So they were moving their funds and their trading activity back onshore into an Australian exchange. So in some respects, we were a net beneficiary of what happened with FTX in that regard. I think too that there was, and has been since, we've certainly heard a lot from clients, an understanding of the positions that we've taken in terms of the cautious note that we've taken in terms of really strongly looking at it from a regulatory point of view in every move that we've made. And even though it's certainly, we certainly walked away from some profitability in that decision making, but I think for us, it was about understanding that there is, in this early stage of the business, a very real need for that cautious note. And I think it's paid off for our clients. We don't take that trust lightly at all. And we work very hard to maintain and sustain that. But to that point, the FTX debacle just I think for everybody, degraded trust across the industry. And something that's going to take some time to rebuild and get back, we need legislation to come in. And certainly here in Australia, we've seen a change in successive governments, both of which have had crypto regulation as part of their remit. And we've certainly seen that kind of progress slowly come through here locally. But I think as ever kind of take away the pace of that and just push it to the front. And certainly what we've seen out of the US now, I would imagine it's very high on the agenda.
So I absolutely want to check in on Australia. And right now, no one has really pierced that holy grail of mass adoption. For that to happen, as you've said, there's got to be legislative rails, there's got to be regulatory rails, institutional support, liquidity, services, vendors, firms, and of course, investors. What do you think the crypto sentiment in Australia is right now with XRP potentially back in play?
Yeah, I think that if anything, there is a cautious note of optimism in Australia. And I say that as somebody who's been sitting in the crosswinds as the sentiment has blown one direction or the other. It's a cautious note. And I think it's as much to do with the fact that with all of the carry on that's happened in the industry, it hasn't been Australian exchanges. It hasn't been Australian projects. Yes, people have been caught up in it. But the industry, like the local industry around blockchain and cryptocurrency, has managed to get through this relatively unscathed and with pretty good behaviors in place. Personally, I don't think I want to see the same scale of exuberance. We saw a lot of froth in the market in the last bull. And the reason why I don't want that is because ultimately retail investors get burnt out by that. So instead, I think if we can see a steady, progressive growth across the market as more of the infrastructure gets built out, as more of those payment rails and legislative rails, as you mentioned, get built out here locally, Australia's in a prime opportunity in the region and internationally. And particularly since it's traditional financial network, and I use that term not disparagingly, as a former bank employee, but there's traditional, that's a very well built up, very well regulated and understood industry here locally. And cryptocurrency specifically can very easily fold into that, and Australia can really take its place regionally as a cryptocurrency centre. But it's now on things like the government and ASIC to lead the charge to break that way and support the local Australian businesses that have tried so hard to keep going through these more challenging times. Well,
you're definitely among the leading ones who have been working with legislators and regulators, as I know, and really being that industry influence. Do you see other traditional finance peers in Australia also wanting to come into the digital asset space? We're starting to see that emerge across Asia Pacific for sure, but I'm curious what the landscape and the environment is like in Australia right now.
I think it's a space that's only going to get bigger, particularly when we look at international trends. If we look at what the Europeans are going to be doing, once MiCA comes into play, that is going to go, if I can use the word gangbusters, but it's going to go crazy, the development that's going to come out of that region. And that's going to be hugely influential, as well as if we look at what Asia Pacific has done. If you look at Singapore, now Hong Kong, you look at the Japanese centers, like these are areas and countries that have been really closely looking at crypto and digital assets for years. So there's an awful lot to come through. And it's very, very exciting, but it is so important that we get the right groundings, take the lessons that we need to learn as an industry from both traditional finance and from recent events in our own sector, incorporate that, and off we go. And here's the thing, like the good behaviors that we need to deliver on aren't challenging. Things like separation of client assets, like segregation of client assets, that's not particularly difficult to do in terms of work huge parts of your technology to succeed in that. And even if you look at IOSCO, they've got their recommendation documentation that's out at the moment, their white paper out, which I'm going through avidly. But the recommendations that they're putting forward are things like providing information on an ongoing basis around each of the projects that you list, why you've listed them, what your listing criteria are, any disclosures that you need to. These are things that don't require a rebuild of a tech stack. You can do this stuff. And so it just adds so much to the investor, and gives, comfort as well to regulators that you're doing the right thing.
I note that what's happened with the SEC, right? And a U.S. judge finding that XRP is not a security when it came to mass retail, but when it was sold to institutional participants, it was considered a security. So these nuances coming out of the U.S., do they have influence on jurisdictions like Australia? When you take a look at that, does that have a precedent-setting impact? How do you, as industry leader, and how does Australia, from a legal perspective, view a ruling like that?
I think it's influential in the sense that, of course, what the SEC does is influential around the world. And you would, any regulator or legislator is going to look at what they do and take it into consideration. But their decision that XRP is not a security, I think, mirrors what we saw out of Japan years ago, where they said it wasn't a security. And certainly here in Australia, it didn't match up with the local tests around what a security was for XRP. You can't retrofit a lot of what we saw in traditional finance into crypto because of the fact that this is so new, and there is then that opportunity for nuance, which nobody really wants, like, apart from lawyers perhaps, but certainly anybody who's running a business doesn't want there to be any legal nuance. You want that clarity. For me, certainly sitting here in Australia, I look at what the UK is doing very closely. Australia looks very closely at the UK anyway. There's obviously the historical connections between the two countries, but from what I can understand, there is a lot of a very close relations between the two from a government and regulatory point of view. But I also think with the UK, they've got a history of taking on opportunities in financial services and really making something of it. With certainly the Big Bang and et cetera, et cetera. And so there is a lot of very, very smart people in the UK, in and around London, in the financial services, who are absolutely working on what will be probably the next big thing. Even though they're sitting outside of Europe now, I still think that their impact will be felt across the European Union and certainly across into the US and hopefully here to Australia.
Hold on to that thought. When we come back, we're going to be breaking down with Caroline Beller on the crypto landscape in Australia, the impact and beyond. Stay with us.
Australians have been hit with one interest rate hike after another in the battle against inflation. Can an Australian central bank-backed digital currency, or CBDC, be the answer? Can regulators, institutions, and crypto work together to propel the country into a digital economy? More when we come back.
If you don't understand the future, you'll never see your place in it. Introducing Forkast Plus, covering all things blockchain, independent reporting, insights, and access from Asia to the world. We cut through the noise where technology, insights, and access meet, where smart conversations happen. Make friends with disruption. Forkast Plus.
Welcome back to Word on the Block. I'm Angie Lau. I'm here with Caroline Beller, and we're talking about all things crypto, Australia. You've painted a global picture for us, but I also want to understand the economic dynamic that is happening in Australia right now. Much like the rest of the world, it's battling multi-decade high inflation levels. The Reserve Bank of Australia also hiked interest rates to its highest in 11 years in June. I mean, it's the hike heard around the world. Every nation, I feel like, is experiencing this. And the country's central bank governor, Michelle Bullock, has had quite a task ahead of her. What are some of the challenges or opportunities that you see, Caroline, for the crypto industry in the current macro environment? First in Australia, and I think we can take a page out of that and extrapolate it for the global economy too.
This bear cycle and now the economic experience that we're going through has perhaps given the impetus for us all to really closely examine our businesses. Why that's important is because when you've got that kind of core strength coming out of your business, you then have the opportunity when the cycle turns, which inevitably it does, you've got that opportunity to really be a springboard out. So I think that there is an opportunity then for Australian businesses in this sector to become leaders regionally and potentially then globally, simply because of how well they will then be retooled through this process. What does it mean then for us on a day-to-day level? We certainly saw the drawback out of liquidity from a market, both from an institutional point of view, but also from a retail trader point of view. As I mentioned, December was particularly low for us as a trading entity. We started to see the clawback come out in January. But what was also really interesting on Friday, where we saw the XRP announcement, was the rush of liquidity that came on the exchange. So what that told me is that there was a number of participants, and particularly retail, who were sitting on the sidelines and waiting. And so there are perhaps pockets within the economy here locally where they have got some liquidity that's just sitting and waiting for opportunities, either in crypto where they saw that particular movement and they thought, okay, this is a position we want to trade on, or else that they're hoarding their cash, waiting for the rest of the cycle to play through. I suspect that in other Western/developed nations, that's probably what we're going to see, play out. I certainly get the feeling locally is that, we're starting to really feel the impact of both the interest rate increases and really starting to feel the pinch in terms of prices. It's really starting to hit here. And I think that the rest of this calendar year, we're certainly going to feel that hit businesses and hit bottom lines. For us in crypto, though, we're kind of contrary to those markets, because the expectation is with the Bitcoin halving expected in April of next year, generally what that's meant is that in the build-up, we see the increase in action, increase in price movement. And then from kind of April onwards, the expectation certainly is that we'll enter into another bull cycle. We'll wait and see how much all of that plays through, but also we'll also see the size of that, because what's also going to come into play, and what hadn't in prior cycles, is far more of that institutional money is going to be there.
The RBA, back in March, announced the pilot programs to test out CBDCs, right? And then big names like MasterCard jumped into the pool, ANZ, the Australian Bond Exchange. And I'm curious how all of this is impacting the crypto space right now in Australia. And, when you expect something to come out with a CBDC, and your thoughts there.
So that's been a really interesting project, the whole CBDC project, end to end. Because of as you say, the institutions that have come in and to join alongside crypto, alongside payments, alongside traditional finance. So an absolute boon for both. What's also really good is the fact it happened in a bear cycle. I think if this had happened in a bull, it would have been an awful lot more noise and bluster around it. I think they've been given the opportunity to properly experiment, to properly run POCs. These aren't all going to work. That's the point. I think it creates a strengthened matrix for Australia in traditional finance and crypto as we move, into the next, I suppose, the blockchain economy that is to come. Like, that's hugely beneficial. Probably not something that we're going to see the benefit of in 12 months' time. It's more like 18, 2 years, 3 years' time that we start to see that really, really blossom. And I have to say, Singapore, I think, did that really, really well. For my time in Singapore, the way that they tried to blend traditional finance and fintech and then blockchain, I thought that was very clever. And I think, hopefully Australia's picked up on that.
And then the irony of Commonwealth Bank saying it will restrict crypto payments to 10,000 Australian dollars per month. So on one hand, you have this, innovation where people get to participate. There's a playground, sandbox effect, and anything is possible. And then the real life day to day is, this kind of restricting the crypto payments. Obviously the intention to catch fraud and scams, but, these restrictions seem like they would have, a negative impact. It feels more restrictive than innovative. As Australia grows, you're in an environment where, okay, that happens. And does that threaten liquidity? Does that potentially push capital offshore?
So there's a lot with that. I think that the CBA decision, we understand the data that's come out with regards to the number of fraudulent scam money that exits from the banking industry through crypto exchanges. It's not that the crypto exchanges are corrupt, or it's not that the cryptocurrency itself, there's anything wrong with it. It's simply, it's the escape route for a number of those scams. And what the bank reactions to it have been, okay, well, they were getting the pressure. around they have to do something with scams. They saw the sheer percentage points that were going out through crypto exchanges, and so decided to put the pressure point on there. What I think needs to happen with that conversation is not just that the pressure's put on banks or that the pressure's put on crypto exchanges. There is, and everyone is saying it, you need a whole cross-body collaboration, but you also need a huge amount of education in Australia around what's happening with scams. Why are people so vulnerable to them in Australia compared to other countries? That needs to be rooted out and understood and educated on. The decisions then to put those restrictions in place absolutely have impacted negatively a vast number of our crypto users. I know for ourselves, we see it in client feedback all the time, repeated attempts to try and deposit money and they're being rebuffed by one of the big four. That's really challenging for us as a business.
You've been an advocate of the industry's interaction with regulators. And when we come back, take a quick short break. We're going to deep dive into crypto regulations in Australia with Caroline when we return. Stay with us.
From homes to art, gold to government treasuries, more and more countries are embracing tokenization of real-world assets. In Australia, token mapping seeks to build a deeper understanding of digital assets. How will existing regulations apply to crypto? We find out.
All right, welcome back to Word on the Block. And, Caroline, I note that not every business is created equally. And it really takes leadership, but also making sometimes really tough decisions to not necessarily always go for the bottom line. You've noted that a few times that over the past couple of years, the fraud and the hype of no doubt, which you benefited from. But where did you also hold back?
Probably the single biggest and most obvious one is in our listings. We list, I think, less than 30 trading pairs. And that during the bull was a hard line to hold. We do that because we look at the projects quite forensically, as best as we can, with the best of information that's available to us. We get legal opinions, we have a technical review, we have a client review, we view it across loads of different verticals within the business, because we want to make sure that what we list to the best of our ability has got some longevity, has got some kind of legs to it, it's got some benefit to the investor and to the kind of blockchain economy more broadly. Doesn't mean we always pick a winner, but we certainly try to, use that kind of tools of refinement around what we select. And that's because we want to have a business that's going to be around for as long as we possibly can and try not to kind of cut the legs out from under the investors. The shorthand test, and I say this all the time, the shorthand test for that is because my dad trades on the exchange. And so if my dad bought this, whatever the project might be, how would my mum react to that?
Can I explain it to my mom? She doesn't kill me. What we're experiencing right now on exchanges with cryptocurrency, I would hearken to, it's probably not going to look a lot like what we're going to see in the future. I think the future very much is the tokenized expression of the assets that we're trading in right now. It could be equity, it could be real estate, it could be gold, it could be commodities. In that way, how are these kind of tokenized future products? How is Australia thinking about that? And I bring that up because, the token mapping was an important step in establishing a crypto framework in Australia. I believe the consultation ended in March. How did that go?
So we're expecting the results to come out probably at the tail end of this month, I think is the general sense on that. That's a really ambitious project to undertake. And I don't think that it's necessarily been appreciated to the same degree of the sheer trying to figure your way through that maze and then set it against the framework of what currently exists in Australia. Hugely ambitious. So we wait and see what they come out. From our point of view, it was a very positive consultation. And certainly the tone I got from it was positive and collaborative, not collusionary or whatever the word would be. But certainly the impact was, we're coming at it with an open mind and we want to take on board the industry feedback. We are open to what it is that you have to say. And they're willing to put the work in and come back on numerous occasions. It wasn't just a one and done, numerous occasions. So I've got a degree of faith that it's been conducted in as open a manner as possible. And obviously they also heard from people who have different views on crypto and blockchain and so forth, and as they should. So we'll see what they come out with. But to the point around real world assets and tokens, 100% it's the future. I don't even think that that's up for discussion. Certainly not amongst the people within the industry. There's so many benefits that come to it, but also then the movement of illiquid assets into a more liquid form is just going to open up so much more liquidity within broader financial services using crypto and blockchain. It's just fantastic. We list a gold token at the moment on our platform, and there's a couple of other gold tokens that are out there. I don't think necessarily that right now there is as much appetite for traditional financial products, although gold is not a financial product, traditional assets in crypto yet, because I still think we're at the very early advocacy, and they are gung-ho about crypto specifically. But as time rolls on, it's just so much more convenient to be able to use something that you can trade with such speed and such transparency. It's just the inevitability of it. You can't hold back the tide, right? It's just, this is where it's going.
It's going there. It's where we're going at Forkast Labs. These are data tools that need to exist to support that system that is coming. I know that you're building towards that future. We are as well. And there's so much to talk about, but I think we'll catch up in a few years from now when all of this, we're going to look back and we're going to say, do you remember when? I think that conversation is, in 6 months? 6 months to about 8 months. I think we'll catch up in about half a year, and we're going to have that conversation.
Yeah. But you're looking at it going, I can see how many new businesses are going to be built in this next cycle that are going to just be a jetpack to what we need. And it's so, as I say, I keep on saying exciting, but it really is. I am such a nerd for this subject because, pass me the popcorn. How often do you get a ringside seat to this kind of amazing innovation and change in an industry that doesn't really generally do a lot of this? We had the Big Bang, but it was, in the 80s and 90s. Now we're back at it again. So I'm exhilarated.
Well, listen, thank you, because you've given our audience a ringside seat for sure. And getting to participate and observe through your eyes. And I have to say, you've got more than a front row seat. You're in the orchestra, creating the experience that we're all participating in right now. Caroline, it's always a pleasure to hang out with you, and I really appreciate it. And it's not rare to have a female leader like you in this space, but it is one that I thoroughly enjoy, and I think we should have more of. So anyway, it was great to have you on. Really appreciate it.
Thank you very much. Thank you.
And thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Angie Lau, Forkast Editor-in-Chief. Until the next time.